All right, guys, what is going on? What is good? Welcome to the stream. Welcome to Wall Street Wednesday. Who do we got on here? 2024. Who else is ready? Chat is members only today. Chat is members only today. Speaking of members, we do have almost 200 at this point. I know it's been a while since I've given you an update on that. And now you get an update. So there you go. All right. Almost at 200. We're at like 191 or something. 190 somewhere. Which is great. So what's good? Willow, Torty, Felix, Ebernith, Mason, Naruto, Lewis, Leon, and Mundo, Rich off the dip, Jim Bob, Akinolo. Welcome back. It's been a minute. What's good, Jay or Jorks, whatever it is. What's good, Shay? Who else is here, big dog? Who else is here? What's good, Max? Only because of Mason. I was watching Dow today. I ended up taking a break even on it, so it's not even a surprise. Honestly, it's not even a surprise. So it's fine. I couldn't tell you the last time I hit a home run on Dow. I think there was one I did earlier this year. That was like the one in like the last 2 years. Dow is just so fickle. It's just so fickle, you know? What's good, K? What's good, Kaizen? What's good, Scott? Kaizen, speaking of stoic / stoicism, very good, Felix. Very good. I did start sending out the link to you guys for the broker for Stoic FX. Did you guys notice that down here now? stoicfx.com, baby. So, you know, I'm pretty much going public saying, hey, look, man, you want to trade with a regulated broker outside of the US. Okay, so we're talking about non-US people here. Then there you go. Just send me a DM on Instagram and I will send you the link. The link's also posted in the Discord, by the way, too. It's in the announcements tab. I posted it yesterday right before, or a little bit before I had told you that the market review was out. So we are getting a pullback into the range here today. Not a big deal. What has NQ done? Well, I told you in the market review yesterday that I still have, well, I don't know about that. That was like the short-term highs from here. But you remember I talked about these highs, and then I told you about up here, maybe like 21.5, 21,500. That was easily blasted today. You see that? So in London, we went below Sunday's gap. All right. Then we went back into it in the, what is it? The premium end, right? So back into the high end of it, and then we launched for those highs. So although I was not up in front of the charts in here, you know, what makes I guess, directional bias easy. What makes trading easy? What were some of the mental models we talked about yesterday? What were they? I gave you a few different mental models yesterday. Do you remember what they were? At least one of you has to remember. Felix said, do the basics. Well, that's not really the name of it, but that is close. The map is not the territory. Terrain, same shit. But territory is the term that I use because that was the term that Shane Parrish used in his book. But okay, so what does that mean? Welcome back, Alicia. The map is not the territory. What does that mean? In terms of trading, from the trading perspective, what does that mean? The map is not the territory. What did we do yesterday? We had went down into what? Into a small time frame. And I was saying, oh, a lot of people want to short, up candles when they think the market is bearish, and that's not bad by itself, right? It's when you don't know when to apply it, right? So when you're on a 1 minute or a 5 minute chart, and this is all, like if I were to screenshot this right here and this is all you have, you're not working with all of the available information. Your information is very limited because we're looking at, let's say, 2.5 hours of data, right, in here. But if we were to say go out to a 15 and zoom out a little bit, now we can look at, instead of 2.5 hours, we could look at 2.5 days. And that gives us a little bit more of an indication whether we should be long or short, or just not trading at all. So if you were zoomed in on here, right, the target that I gave you in the market review, and I gave it to you yesterday, 21,500, right? You would know in here this morning that we would be in a somewhat of a steep discount, because even the range is technically, the range high is technically from up here. And if we were to take that range high from Monday and go down to the low in London, had you traded near equities open or just afterward, you would realize what? That in here, you're in a discount. You're in a discount. So would you be looking for shorts in a discount? You can. Nobody's going to stop you, but it's probably not that logical. What's good, Jordan? So had you zoomed out and say, okay, well, we've actually been trading lower for quite some time, but, John still talked about 21,500. That might seem like it's kind of far away, but look at the chart. Like Mark Douglas talks about, anything can happen. We can go lower, sure. Or we could go higher. So, and again, I want to make this clear. I'm not saying you can't short the market, as it's going lower. You can definitely do that. But the way that I trade, the way that I try and teach you guys how to view the markets, it's based on liquidity, right? So if that's where the resting liquidity is, I want to take a long on the way there. You know what I mean? And so coming back, the map is not the territory. What is the right fix to that? If one chart is not enough, because it's limited in the amount of data that you have. What would be the correction? The lowest set before people wake up at 5 a.m. Yeah. Sometimes the early bird gets the good trade. And then people like me who sleep in and then take a late trade and get a break even. It's like, well, I ain't mad. I ain't mad at the market. That's on me. That is on me. So what is the antidote to a limited perspective of only one chart? Shay says, broaden your view. Don't be too focused on one time frame. So then how do we fix that? Man, what a pullback. That's crazy. Dow probably made a new low of day, I bet. How much you want to bet, chat? Look at that fucking dirt. Look at that dirt. Look at this garbage. Horrendousness. Sick. Makes me sick. Well, at least I got a break even, which is fine. So I shouldn't have been trading the weakest index anyway, but it's fine. I was trying to see if Dow would catch up to the other indices, and it turns out the other indices are trying to catch up with Dow. So it's really not that much of a surprise given higher highs, and then, oh man, wow, that was a beauty. To be fair, though, I wasn't looking for shorts, but there's my Judas model at work. Whew. 1, 2, 3 highs, last imbalance. Oof, that's nasty. That's nasty. What a day. Well, my stocks count was up today. That may no longer be the case by the time we close today. Google was holding it down. Let me go look at that real quick. Google was holding it down. You know what I mean? Google was like, hey, bro, hold my beer. And it was up like 5% at one point. And it's pulled back a little bit. Not a big deal. We took the high from March. Right there. So I guess that's not a surprise. Oops. That's not a surprise. I'm not partialing, though. I'm not partialing. I'm going to hold for hopefully back above 200. But I was getting a little worried back in May. Or, well, it is May, but back in here when they had that big-ass lawsuit. I told you. Can't escape the lawsuits, man. Yikes. But anyway, we finally overcame that. So I'm still fairly bullish on Google. And that is pretty much what made the stocks account green today. But yikes. If we end up pulling back, then yeah, I might have a red day today. Not a big deal. Not a big deal, champ. But anyway. Let me see. Let me ask you this, chat. Were any of you guys looking for shorts up here? I don't really see the Judas model there on the 1 minute. I only see it for ES. And there's our new low. Right there. Wow. What a week, chat. What an interesting week. Let me come back to my point about the mental models. So the map is not the territory, right? So the antidote Naruto, top-down analysis. Ebonith, go to higher time frames. Shay, top-down analysis. Right. I would almost argue the triple screen. Right? Having 3 charts, 1 minute or 5 minute, 15 minute or 1 hour, and then the daily or weekly. So that way you're not lost in the sauce. And when you align, you know, smaller time frames with higher time frames, then you get moves like this. So, yeah, that's not bad. But yeah, what a large range. Let me see. Yeah, well, relative. So we do not take Tuesday. Yeah, we do not take yesterday's high, but we definitely took yesterday's low. So we have a much larger range today than we did yesterday, which is fine. But that's definitely not bad. Are any of you guys short at the moment? Did any of you see that Judas model for lower? I honestly didn't think we would do that. I thought about it and I was like, well, if Nasdaq is leading to the upside, if ES follows suit, then we really should probably trade up here. That's what I was looking for. We did not get that. Max, are you when you said you got out break even, were you short or were you long? Because if you were long and broke even, that's a good thing. Because obviously being long here is offside. If you were short and got a break even, that sucks. That definitely sucks. But look, I'm not a perfect trader either. Okay. There are times where I break even too fast too. It's happened. But yeah, Torty, that's a good point. So let's go out to Dow for just a second. I don't think it was, let me see. It might not have been yesterday, but I think on Monday, I was talking about how higher time frames for me are bullish. But I was also saying we can have a pullback. It's not a big deal. And I'm fairly convinced that I at least pointed out one of these gaps to you. Because we have a gap on Dow. We have the same stuff over in ES, right? As well as NQ. Right? So I can be bullish on a higher time frame, but that doesn't mean we won't have sell-offs, especially on an intraday basis. You see what I mean? So that looks heavy. That is a heavy market right here. So yeah, I guess we can probably watch that deliver lower. Look at a lot of these wicks though. Or sorry, body, like lack of wicks. Here, and here, and then right here as well. That's a very heavy market. Y'all see what I'm talking about? This stuff right here and right here. Sheesh. What a sell off. Oh, you were long on ES? Damn. Yeah, Jordan, I agree. RIP to people who didn't TP longs or at least didn't go break even. So I've been harping on this time and time and time again. if you get new highs, if you get a new, well, let's say a new high if you're bullish, or some highs when you're bullish, if you do not partial, the market can come back. Today's a perfect example of that. It may not do this very often, but look what it did. And yeah, Jordan, in the span of like 30, this is a 15-minute time frame. So that's why I said we'll probably watch it deliver, make a new low. Which is just interesting. And that's why I was on this 1 minute trying to see, there's your new low. I was trying to see like what we were doing in here. And that's just so heavy. It's like, it's a magnet today. You know what I mean? What was that law that I told you about? The law of speed. We got 48 viewers, 48 laws, right? Bulls take the stairs, bears jump out the window. Yeah. Pretty cool, right? Markets do the same stuff, man. That's why they are laws and not theories. Mason, that is a good point. And that's why I went out to the daily a second ago. Because what we've done now is we've set up low resistant highs on the 1 hour. So we set something up for later. Probably not today. But I'm fairly convinced that we've engineered, or not we, but those highs to me have been engineered, right? So it's fine, right? Look at the daily. We've been running for weeks, over a month, right? We're allowed to pull back. We're allowed to, I mean, we could even come back down to 20K or below. It's not unheard of. Big ass run, squeeze them out. Weak longs, as the old heads would say. Traders who see a pullback and go, oh no, it's down 1%, right? Oh, Trump is such a bad president, you know? All that bullshit starts to come out, right? Okay, then get out. But I can almost guarantee, I can't guarantee because it's just an opinion, but smart money is going to be on the other side of that. They're going to be taking whatever you're trying to sell because you're panic selling. And then we'll probably go higher. So it's not a big deal. Okay. When you're in from the lows, 1 or 2, or maybe even a couple of weeks of drawdown, not that big of a deal. Okay. But again, that's why I said it's been kind of a weird week. I've been not entirely offside, but things have not been, I haven't been as precise this week, which is okay. Let's go take a brief look at gold really quick, just as a follow-up. Yesterday, I told you guys about 32.95 and 33.44. I told you in the market review that we barely had tapped into it yesterday, but I think we could trade further into that. Wow. How hard is that? How hard is that? But what I will say is yesterday evening, there was a very short-term sell model here. You see that? Let me scrunch this up. This I thought was a really good example. Consolidation right before this expansion, and that being on a 1 minute of gold. Okay, that to me is manipulation. What's down here? Not just equal lows right there, but what? consolidation. Original consolidation. First stage, accumulation. Second stage. All right. See that? Manipulation, low risk short. Lower, small retracement. Then a run below the lows. That to me was nasty. Now, to be fair, I don't trade around this time, like 8 p.m., 8:30. I don't trade around that time. But this is still a very, very nice example. It's also a Judas here as well. That imbalance here got traded through, and then the low risk short was the inversion to go lower. That was nice. But I will tell you, again, that for me, that would just be a day trade. I would not hold shorts through that because of the very reason I already gave you yesterday, which was what? That we would likely trade further into this gap. So that was counter trend, which it's not, again, it's not bad. It's just you don't want to hold trades like that. Counter higher time frame. Does that make sense? So although it was clean, that's a day trade. That's not a swing. Okay. Outside of that for gold, I really don't have much else. For me, I think if I were to trade gold every day, I probably wouldn't be as accurate versus waiting strictly for clean lows and clean highs. Right? I don't like consolidations like this. That's hard for me to trade, personally. Yeah, that's all I got for gold. I don't have anything. I don't have anything else for that. Let's take a brief look at silver. Short-term low from May 1st got taken on the 15th. We've seen somewhat of an expansion the last couple of days. I just hope this continues. That's it. That's all I got for silver. I literally, that's it. So there you go. I think dollar index I did talk about very, very briefly. And all I said was whenever we make a low and whenever we start trading higher, I was interested in what's up here, right? Sunday's gap slash low resistance highs here. It doesn't look like we've made a low yet, unless this is it. But again, I had went to the daily and I'm looking at this. What is this? This looks like shit to me. What else do you want? So just a whole bunch of lower lows. Yeah, this is just throw currencies away altogether. Looks like shit. I do want to watch indices on a small time frame as per usual, just to see if we get any sort of reversal here off of taking these lows. Maybe trade back into the range, but I would not advise trading here. Okay. All right. I really don't have much else for you, so I guess we can go over a couple more mental models if you guys want. Drop a MM in the chat if you guys want to go over some more mental models. Not market maker models. That's MMXM. Mental models. For traders, at least. Drop a MM in the chat. You guys like mental models? First of all, I don't even know how I didn't come across this a lot sooner. I mean, I've known about Shane Parrish. I've known about Charlie Munger for a long time. I don't know how I'm just getting around to mental models. I don't know. But I can tell you they're pretty solid. And you will start to look at things very differently moving forward. It's basically, I was talking, I had lunch with a friend like a week ago. And she's kind of like a manager, I think. I hope she's not watching the stream because I should know that. Anyway, and she has like a small group of people that she oversees, and you know, when it comes to teamwork and business, there's always got to be some sort of problem solving, right? When you're dealing with people, when you're dealing with customers, when you're dealing with fucking insurance companies, and you know, when there's a lot of moving parts. And so I was telling her, I think, let me show you guys this again. I told her, I was like, yo, The Great Mental Models by Shane Parrish. It's an easy read. It's not a thick book. It's like $15 on Amazon. I was like, I think this would help you a lot because it's just a way of looking at problems and figuring out the solutions, right? And so as I'm reading that one, I read another one. Let me see if I can pull it up. There was another one I bought on Amazon. It was like $4. Trying to show you the fucking cover. It's like bullshit around. Boom. Mental models. Can you guys see that? Mental Models by Peter Hollins. Peter Hollins, right? Finished that one in like 2 days. Very, very easy reads. And I was like, you know what? These aren't bad. Some of them kind of suck. Some of them are like, all right, this is complicated and I'm not doing that shit. Like one of them is based on some sort of math. I'm like, oh yeah, fuck that. let me keep going. You know what I mean? And so the first one I thought that was good for traders was The Map Is Not the Territory. That's a good one. Number 2, I think I went over a couple of these yesterday. Number 2, Second Order Thinking. Second Order Thinking. That was a nice imbalance right there. Breakaway on ES. I guess breakaway on Dow. The second one. Oh, that's funny. I did that. The second one is Second Order Thinking. Anyway, what do you think Second Order Thinking is? What is Second Order Thinking? First Order Thinking is irrational. It's quick. It's off the cuff decision. Often a reaction instead of a response. But those are different things, right? A reaction is instant. It's quick. Often the wrong choice. Like honking when somebody cuts you off, or giving them the middle finger when somebody cuts you off, or starting to honk when people are going slow in the fast lane. Trust me, I know. or wanting to get right back into a trade after you took a loss or a series of losses, right? Revenge trading. Those are first order thinking. Those are reactions and not responses. Damn, Scott. Took it on the combine. You thought, but it was on the paper account instead. Well, shit, I'd say at least manage it like it was a real trade. Second order thinking, okay, it's exactly what it sounds like. Consequences of your current actions. It means to pause before you react. It means to say, okay, hypothetically, I just took a loss or a series of losses. I need to get my money back. I need to pass my combine or whatever funded challenge. My stop loss was the low. Now that I got swept, oh, the low's been set. Let me get back in. And there are instances when that would work. But I'm just trying to give you guys some ideas of what I think you think when that happens. Okay? Second order thinking basically says, look, what are the consequences if I do this again? If I take another loss, what's going to happen? If I over leverage, what's going to happen? If I don't drop a like on the stream, what's going to happen? He's probably going to remind us that we don't ever like the stream. It'll probably ask us to drop a like on the stream if we got value. I don't know. Maybe, maybe not. So second order thinking, okay, it's in short, it means, look, before you do something stupid, before you make your next move, consider not just the immediate consequences, but also the long-term consequences. That's what second order thinking is. Okay? Did we do ones? No, we did not. We'll just go to two. Drop some twos in the chat if you guys are with me so far. Number one, the map is not the territory. Number two, second order thinking. That should be easy to remember. Right? So in short, number one, the map is not the territory. Utilize multiple time frames. Number two, second order thinking. Consequences of current or potential next actions. Number three, Occam's razor. I think it's OCHAM, Occam's razor, which states that most likely the simplest answer is the right one. The more complicated you get, usually that's going to be the wrong answer. Okay, so simplicity is often the right answer. Why did I take a losing trade? Well, you probably didn't see the equal lows or the equal highs. Why did I go break even too quick? Because you're impulsive and you're impatient. You know what I mean? So there's probably a lot more to it than that, but I at least want to get through a few more of these before we hop off today. I was going to make this own independent video. I still plan on doing that. But I at least want to give you something to think about today and tomorrow. Here's something that I mentioned yesterday in the Discord. When I told you guys on the stream saying, I'm not going to trade the PM session. Shay, why don't you put it in the chat? Why don't you put it in the chat? Number four, inversion. Number four, inversion. Do more right by doing less wrong. Okay, number four is inversion. Do more right by doing less wrong. So what does that mean? Well, that kind of goes, a lot of these are going to be interconnected, by the way, aka a lattice work of mental models, okay? Because not every model is going to fit your situation. Sometimes one situation might require one model or maybe multiple models. Second order thinking, right, considers the consequences of the current or future actions, right? Inversion, doing more right by doing less wrong. You consider what people do wrong and then avoid those things. There's a whole masterclass on that. What do traders do wrong? They enter early, they enter late, they over leverage, they over trade, they are impatient, impulsive, you know, a lot of things that we do wrong. And so by having that list and avoiding those things, that's what the inverse is. By doing less wrong, you get to do more right. For example, if you don't like the current conditions, maybe we're consolidating, maybe we're expanding or whatever. If you don't like what the market is doing, then don't trade it. Then don't trade it. And by doing less wrong, you're not going to take a losing trade. So you do more right. By, what's the right word? You're surviving, basically. Survivability. You're not making money, but you're not losing money either. Versus the person who trades conditions they don't like or don't understand, and they end up taking a loss. And that's why I put that in the chat yesterday. That was a perfect example. I told you yesterday, if I wanted to be bullish, I was like, look, I don't know. If I had to pick a side, it would be bullish, right? And then right after we got off the stream, like, I don't know, within an hour, the markets ripped ass and they went lower. And that's why I put that in there. I'm like, look, I told you so. My bias was wrong, but I didn't take a trade. So I did more right by doing less wrong. So you're minimizing the amount of mistakes that you make. And by minimizing the mistakes, you invariably maximize. What's the opposite of mistakes, chat? I'm not an English major. By doing less wrong, you do more right. Okay, we'll leave it at that. We'll leave it at that. So number 4, inversion. Do more right by doing less wrong. Number 5. This is a big one. And I know I talked about this before too. Number 5, circle of competence. Circle of competence, which means there's chapters on this, so I'm not going to give you all the details or all the talking points, but the circle of competence basically states work with what you're an expert at and slowly expand your circle. But the more you operate outside your circle of competence, the more likely you're going to do wrong. The more mistakes, the more failures, you know, XYZ. If you stay within your expertise, the more right you're going to do. Okay? I'm not saying, okay, never learn things outside your circle. No. You do expand your circle, but you expand it slowly. Right? If you like trading currencies and you don't like indices, then stay within currencies. But at least at some point, study the indices. You know, see if you like them. See if the times that the indices move, right? Because I know a lot of you are from all over the world in different time zones. Like, I don't trade London because that's not my time zone, right? Work with what you're good at and with what you're an expert in, but then slowly expand your circle over time. Okay? That's what the circle of competence is. Drop some 5s in the chat if you guys are with me so far. We got about 10 minutes left. We're coming up on the 1 p.m. macro, so I don't know what we're going to do here, but it looks like, again, we are, you know, back within the range. I could see us probably trading higher. Because, again, what is this, bro? What is all of that in here? Just no wicks on the upside at all. So I'm wondering if we come back to clean that up. We don't have to. I'm just wondering, are we going to clean that up or not? And that's all. That's probably all that I'm going to watch for today. I stopped trading London because I'm not up for London, Willow. I go to sleep at like midnight, maybe 1 a.m. So I go to sleep right before London starts. And I like indices because I can be awake for them. Gavin, I try to wake up before equities open. Doesn't always work out that way though. Okay. Sometimes I do sleep in, yes. But if I know, like say it's Tuesday or Wednesday, like today I should have. If I know like, okay, tomorrow's probably going to be a good day to trade, I'll set alarms and stuff. Imagine waking up at 5 a.m. every day. Yeah, it couldn't be me. Couldn't be me, Jordan. I did that when I was in the military and I hated it. I'll probably never do that again. It's too early. $3.50 every day? Jesus, Willow. You probably go to bed at like 8 p.m. Your ass is probably in the bed at like 8 p.m. 9 at the latest. Dinner at fucking 3:30. Dinner at 3:30. Lunch at 10 a.m. for Willow. Yeah, y'all are wildin'. It ain't for me, dog. It ain't for me. All right. Number 1, the map is not the territory. Number 2, second order thinking. Number 3, Occam's razor. Number 4, inversion. Number 5, circle of competence. Number 6, first principles thinking. Number 6, first principles thinking. Stick to the basics. Models are basic. The inversion model, that's basic. Find the last inversion. Wait for a shift in price delivery, i.e. disrespect the imbalance. Long the inversion, stop at the low, aiming for a 1 to 2. Or short, if you're going short. 1 to 2. It's good for me, it's good for you. That's simple. Buy low, sell high. First principles thinking. Premium discount, right? First principles thinking. Find the liquidity, trade in that direction. First principles thinking. Number 7. This is a good one. You've probably heard this before. I know for a fact you've heard this before. Yeah, all of the indices did the same thing in here. Around 12.15, 12.20. They all did just almost no upside delivery whatsoever. Interesting. Number 7. There are more. I just haven't taken... I have a bunch of notes. I haven't gone through the notes to make more. But number 7, probabilistic thinking. Number 7, probabilistic thinking. What do you think that means? Probabilities, not absolutes. I tell you guys all the time, I could be wrong. I'm bullish, but I could be wrong. I'm bearish, but I could be wrong. There's always going to be some level of uncertainty. Now, we know, I wouldn't say this as a nice example because it's very distorted because the engineered high is our current high of the day, so I don't see us coming back up there today, but if this were any other setup, I would tell you, yeah, we swept the lows, we have opposing liquidity. So if we're trading in that direction, we have a higher probability of winning that trade than we do taking a loss. It doesn't mean we won't take a loss. You think I passed 2 different combines without taking a loss? No. No. Now, I've seen traders, you know, pass it in like 3 trades or 4 trades without taking a loss. Yeah, I've seen that, but I didn't do it that way. Right? It's all about probabilities of one thing happening over another. Right? That's the whole point of a model. The whole point of a model. In this let me see some. In this example, again, we don't really have it, but if we were to get something like this, like let's say we made a new low of day, let's say these were equal highs, right? And then we traded back into the range, I'd say, okay, we took out a low, we have opposing liquidity, so the probabilities are we have a higher chance. It's not a percentage. It's just like, hey, we are more likely to go higher than we are to go lower again. Does that make sense? That is like almost the entire premise to the Judas model. The Judas model. Again, let's review this one more time. Probabilistic thinking, right? We have 3 higher, well, like 4 really, but you get what I'm saying. We have a series of higher highs. The market at that particular point, because this is hindsight, I did not call this out, but in looking at today, what do we do? London was, well, lower and then higher. Equities AM session was higher, and then even lunch was higher. So we had multiple sessions of higher pricing, right? Multiple sessions of higher pricing. We could almost say this is a premium because it's above Sunday's gap too, if you really wanted to get technical, right? Because that's still on here. That's still Sunday's gap. See? Below it, discount. Above it, premium. See that? See where that Judas model was? Above it. We're in a heavy premium. We've traded higher like 3 sessions in a row. And then we traded through and disrespected the most recent imbalance, which is that one. And we created a gap on the way lower. So what's that right there at 11:54? That is the 12 o'clock macro, which is here. Okay, 11:50 to 12:10. You get my Judas model inside the 12 p.m. macro CST in a market that is in a premium based on Sunday's gap. That was nasty. Again, I wasn't looking for shorts. I really wasn't. But that is probabilities. What are the probabilities that we're going to go lower at least for some internal range lows? That's high probability. Are we going to continue down and make a new low of day? I usually don't expect that, but it can happen. But the whole point is at that particular price point, like if this had not formed yet, and as soon as that down candle here closes below that imbalance, that's not a bullish imbalance anymore. Well, it wasn't really to begin with, but you get what I'm saying, right? So probabilities based on the different ways that we look at price, premium discount, Sunday's gap, the formations, the logic, the model. The model states that probabilities are we are more likely to go lower versus going higher. Now, will you come across an instance where you short and then you take a small loss, 3 or 4 points. Yeah. Because nothing is absolute. Nothing is absolute. There's going to be manual price manipulation, and none of us can predict that because we don't control when you know who is going to finesse price manually. We don't know that. So there's always uncertainty, and that's why we have to think in probabilities. And when we do that, it gives us, I guess, confidence that, you know, to take the trade, that we're more likely to go lower versus higher in that particular scenario, for every scenario. Why do you think trading, when we were, let's come back to what we were doing yesterday. You remember that range we were working with yesterday? Oh, it was on Nasdaq, actually. I'm sorry. It was in here. Do you remember yesterday? And we had measured from the target down to the low, or was it that low? And then our stream was in here. And you remember how I was saying the 420 level was also 50% of the range? The probabilities at 50% of the range are not good. They're 50-50. It could go lower like it did yesterday, or it could go higher like I thought it would for the liquidity. But trading near 50% is not high probability. Does that make sense? So by avoiding any trades yesterday, because I wanted it long, but I didn't. And by avoiding that, look what happened. It did end up going lower, and I was wrong. Okay? So that is probabilistic thinking. You're not always going to get it right. I'm not always going to get it right. But what we're just looking for is, again, high probability trades. And that's it. Well, there's more to it than that, but that's it as far as like what I have to... Oh, that pulled up the tweet. I was about to say, what the fuck is going on? Let's just delete everything. You're talking about this? Who is that, Mason? You're talking about this load down here? Yeah, that makes sense. We could make a lower low on the day. We might not be done. Bearish markets, right? And then, you know how we traders are. A lot of us want to try and catch the low, right? So market makes a low, get people thinking, oh, the low's been set. Run it one more time. And that's why I said we may end up doing that. We may end up making a new low and then trading back in the range. But I'm not interested in this, personally. The only way I'll say this in closing. The only way I'd be interested in this is if we get a divergence at the lows. That's it. If ES makes a lower low, NQ doesn't, there's a chance I may trade ES. Maybe. And that's only because if we have manipulation, I'll take a small, like low risk trade, but that's it. Other than that, this does not look good to me. Okay? So I'll say the 7 one more time, and then you guys can go do what you gotta do. I don't need to clip it. It's fine. Mental models for traders. Number 1, the map is not the territory. Number 2, second order thinking. Number 3, Occam's razor. Number 4, inversion. Number 5, circle of competence. Number 6, first principles thinking. Number 7, probabilistic thinking. There are more. I don't have them yet. That's all I have on my notes right now. Okay? I did take notes, and that's all I got for you. See this? That's what I got. I know you probably can't see what the text says, but that's what it says. Market, or not market. That's my brain working, right? Market maker models. Mental models for traders. Those are the 7 that I just gave you. There are more, but I don't have them. Okay, I'll have them for you another time. Maybe Friday, maybe next week. Who knows? But if you guys got some value, make sure to drop a like on the stream. I would greatly appreciate that. And Edgar, a divergence, you need to go watch the 48 Laws of Trading video. That will tell you more. The law of strength and the law of weakness, which is somewhere in the first 10. All right. So be good, be blessed. We'll be here same time, same place on Friday, May 23rd.
I wish I could have known that look in your eyes would echo in mine and go back out of my mind across the line. When was the last time I felt like this? That desire and turn